Hey everybody, what's happening? It's Bill with Franklin Loan Center, and today I brought up some really geeky charts, so we could look at like what's really happening with interest rates. Where do we stand right now? And from my sort of like opinion, where do I think we're headed? Right. So what we're looking here is this is a 3-year chart of the actual mortgage-backed security coupons. So this is like really where mortgages get priced, right? So this is the Fannie Mae bond, and so it's not the yield on the 10-year treasury, which a lot of people talk about. It's the actual, this is what actually sets rates, right? And so note that on this chart, up is good for interest rates and down is bad, right? So you can see that, leading into this section right here, this is March of 2020. So this is like right when COVID was breaking out. And for anybody that was either in the mortgage market at that point, or for any of our friends in the real estate business, we can remember those days. You literally could hardly even price a mortgage because it was just all over the place. Like literally, the market did not know how to take the news that was going on. And then we all saw that rates hit these record, like literal all-time record lows. Again, up being good on this. So these are the all-time record lows, and then this is what's been happening for the last couple of years, right? And then this is what's happened over literally since the beginning of the year. I mean, it started tracking down, like rates kind of started worsening in October. No big surprise there because inflation was really starting to look ugly. But then now this year, it's been very rough on interest rates. So what it's really done is it's taken us back to this point here. So we're currently basically where we were in March of 2020. You're starting to see mortgage rates, 30-year fixed rates in the upper 3% range, mid to upper 3%. And, hopefully we'll see that sort of settle out. Who knows? Over the short haul, yesterday, another very rough day in interest rates. Today, actually bouncing back. So we'll see what happens here. But just keep in mind, I mean, charts aside, this is literally all about inflation. We've talked about it a million times. Inflation is the absolute arch enemy to mortgage rates, right? And the logic makes sense, right? So if inflation goes up, and so if you have the same amount of dollars that work for you, and you own a 30-year fixed bond, as inflation goes up and your investment returns do not, you're actually starting to lose money on those investments, right? And so like, why would you buy them? It's not people like you and I that are buying. They're huge institutions, so they've got their reasons, but they're seeing diminishing returns on their investments into the longer term fixed programs. Let's see what happens. I will tell you, I mean, inflation, the headline inflation number that just came out a lot last week got a lot of news. It was the highest in 40 years. It was really scary, but the one little bright spot that I saw in that is the month over month number. So November versus December, actually the inflation was a bit lower than anticipated. And so who knows what to expect there. But I think as the Fed gets more and more involved, it's going to cool the economy. This is what we're hoping for. Cool the economy some, and that should bring the inflation down, and that should improve mortgage rates. We'll see how it plays out, right? I mean, I say we got a 4 to 6 month window here to really see how it how it all vets out. But that's my guess. But anyway, just long story short, I wanted everybody to just see this is what's real in mortgage rates, right? We're back. I mean, we're definitely off these ridiculous lows, but we're back into a spot where we're kind of seeing now rates that are really kind of in line with when there's not a bunch of Fed stimulus, right? So these are the Fed almost not involved at all. This is with the Fed heavily involved, and now we're getting back to the Fed not being involved. So time will tell, but we're probably roughly where we belong right now. Rates are still, again, a rate with a 3 in front of it. In my over 20 years in the business, there's not been a lot of time windows where it's greater than 30, where you're in the 3s and lower. So just my 2 cents. Hope everyone's doing good, and I will see you all next week.